Indeed, 2016 was a very difficult year for the industry, and particularly for medium-sized banks like ours. I think the problem started with the fall of Imperial Bank when they were put into receivership. That was late 2015. And then around April, Chase Bank also went into receivership. Then there was some kind of loss of confidence in the smaller banks. And to us, those smaller banks will account for maybe 21, 22 banks here in Kenya. And we saw some panic in the industry, loss of deposit. I think we, as Gulf African Bank, during that time alone, we lost almost 4 billion of deposit. Yeah. So it was a bit challenging. We had to come out very, very strongly to assure our customers that it has nothing to do with the smaller banks. In fact, we were not even defending Gulf African Bank. We were defending the whole industry, that these are isolated cases. It is not a systemic problem that we have in Kenya, and therefore it should not worry them. So we recovered very quickly from that after a couple of months, because we closed the year even higher than before the crisis took place. Then at around September, as you know, we had the interest rate cap laws coming into effect. Now, Gulf African Bank, we do not deal with interest rates because we are Sharia compliant, but we use market interest rates to benchmark our pricing. And the law was to everybody. It was not just to conventional banks or Sharia banks. So the impact was there. So we again suffered that impact. But overall, we still managed to close the year positively. Maybe not as much as we had set for during the beginning of the year, but we ended closing almost about $500 million in profit after tax, which was still quite remarkable under the circumstances. I think it's two things. One is the support from our customers, because when we went out there and told them how strong the bank is, and the way that we were not impacted by this, and we have nothing, we don't even have an exposure with the banks like Imperial Bank. So if they are going down, it does not impact us in any way. That one helped. We actually did customer forums in Nairobi and Mombasa. We invited several of our customers. They came in their hundreds, and we explained it to them. And the other thing also, what we created was an awareness about Gulf African Bank and about our shareholders, because we have very, very strong shareholders, but we have not leveraged on that information to our customers. So we explained to them who owns us. For example, one of the biggest shareholder of Gulf African Bank is Dubai World, which is an investment arm of the government of Dubai. One of our shareholders is the IFC, International Finance Corporation, which is an investment arm also of the World Bank. We have the PTA Bank, which is a regional commercial bank owned by 19 countries, including Kenya. So by extension, Kenya government is also a shareholder of Gulf African Bank through their investment with PTA. We have Al Salam Bank and Bank Muscat from Bahrain, whose capital is over $1 billion. So we have a very, very strong backing of our shareholders. Okay, the ones that I mentioned to you would constitute more than 85% of the shareholding of the bank. So we used that information to tell people, like, look, we are not as small as you may think. We may be small here in Kenya, but our shareholders are very, very strong out there. So it helped a lot to restore confidence. You see, right now, many banks are coming up with different products. I'll give you a very good example. In the Middle East, or even in the West, most of the Western countries, interest rates are below 5%. LIBOR itself, which is used as the benchmark for most credit in the West, is around 1%, 1.5%, depending on the tenor. But banks there make more profit than banks in Kenya. How is that so? You see, it's because people are more innovative. People make money through commissions and through charges on products that they offer and services. And that should be the way also Kenya goes. And it has already created that impetus in the market for people to become more innovative. You will now very soon, we just recently launched the equivalent of M-Pesa through Kenya Bankers Association. So these are the kinds of innovations that will be coming into the market, and other products that banks will now start offering. You will see banks offering products that have never been, you have never heard of before. It will create, market will adjust. People will start to deal with volumes. People will start with, because now it's the same amount of profit that you are expecting by lending at 14%. That you used to get by lending at 20%. Okay. The only problem that we have as the banking industry about this new regulation is, one, it has not achieved its intended purpose for reasons that, and we have explained this to the authorities. You would have expected that if cost of borrowing goes down, then that impact should be felt across the economy. Because now, cost of borrowing, even for other people, has gone down. So construction costs, maybe prices should go down because the developers are borrowing at much cheaper rates. Cost of foods should go down because everybody is borrowing, and their cost of borrowing has gone down substantially. Is that impact felt by the common mwananchi down there? It's not. So people have enjoyed it, they have increased their own profits, but they are not passing it on. It was supposed to cascade all the way down. So that one is not there. Two, our contention with this law is not about capping the rates. Rates can be capped so that we can make cost of credit cheaper in this market. But what we are saying today is it ignores the risks that are there. It is not commensurate to the risk that banks are taking. Today, if we lend money to a client for 3 months or for 20 years, we charge him the same. I can't price the risk. If I'm lending money to a secured loan or unsecured, it's the same. If I lend money to a AAA rated company or to the smallest SME, it will be the same. It cannot be. So this is the only challenge we have here in between. And who is our biggest competitor here? If I can buy treasury bills or bonds at 13% or even at 12%, why should I bother to take a huge risk at 14%, a difference of 200 basis points? It does not make sense. I would rather and that is why you hear things hue and cry in the market that there is no funding and people are not getting money, because banks have found other ways to invest that money which are less riskier. I will rather go to the government of Kenya, which is risk-free. So these are the kind of challenges that we hope this will be looked at again, now maybe through more economic reasoning rather than political reasoning. The trend for every election year is more or less the same. So since we also knew about the upcoming elections maybe 5 years ago, even when we were putting our 3-year plan, we took that into consideration, that this will be an election year. The areas that may be impacted, usually the construction area and the mortgage and all that, is what that gets more impacted during an election year. So we have taken into consideration now, unless something also comes out of whatever is generally related to elections, but otherwise we have projected taking into consideration. Now again, in the previous years, during an election year, the economy tends to slow down, sometimes even to go down a little bit, and it takes almost 1.5 years for it to recover. Okay, so it's not just the election itself, even the post-election, yes, yeah, you will have the recovery period, because people now are waiting to see, and also depend what will happen. We hope nothing happens, and we will have smooth elections, unlike what we had in 2007. But again, investors tend to shy away during that period, so it takes a while before we have a full recovery for that. We have put in place quite a few. Some of them are with the central bank waiting approval. Some of the new products that we are offering today is, for example, you remember we have this special focus on women banking. Okay, and we are working very closely with some UN organizations to promote women banking. It's one product that has done very well for us, and we continue to expound on it, and for the benefit of the women themselves and for the bank. So we are offering something very tangible also to the society. We are coming up with a product that focuses on high net worth individuals. Okay, understanding what they need. These are the people who do not have the time to come and do daily banking. These are people who travel a lot. These are people who have huge investments. Sometimes they get deals like that cannot wait, and they need very quick turnaround time. So those are things that we are coming up with an HNI, high net worth individual product, specific need to a group of people that require these products. We want to develop products for the youth. Okay, the government today tendering process, 1/3 of it goes to the youth. The biggest problem our youth have is security. So we are coming with programs where we can now finance them against government tenders without security. Now this works both ways. For us, it's an opportunity to do business, and for the youth, it's an opportunity for them to enter into this market, because they may not have security to give you today, but after they win 2 or 3 tenders, they should be able now to, and it will create even employment. So this is also our contribution to the general economy. But if you give this guy financing to supply or to build a small road for the government, you will have created employment and improved their well-being. So these are some of the products we are coming up with. We want to launch our first Sharia-compliant credit card, which will be the first of its kind, probably in Africa. With the exception of North Africa, the rest of African countries, nobody has that. Even South Africa do not have that. Yeah, so that is something innovative that we can come up with. And we are at advanced stage of formalizing that. So these are some of the products that we are looking to do. We are putting quite a bit of investment there, and our projection is for the coming years, particularly from 2018 going forward, we will invest more heavily. We had, as I said earlier, we had a 3-year plan, and our plan for 2017 was to open 5 branches. 2017, we wanted to open 5 new branches, brick and mortar branches. Then, with these new developments that came into the market, we revised that plan. And we are saying we are not opening 3 new branches. What we are doing now, we are opening 3 new service centers. These are small kind of makeshift agency, okay, although we will operate them ourselves. Yeah, but put them in strategic locations, okay, where we wanted to. So whatever we are saving out of that goes to technology, okay, improving our internet banking, improving our mobile phone banking, we are coming up with a software that will automate our processes from loan origination to loan disbursement. Everything is automated, okay? For efficiency purposes, for turnaround purposes, and for reducing also the human input, okay? Because the different layers of processes that takes place then will be cut almost into half, okay? So we will reduce in terms of number of staff, employing new staff as the bank grows. And by the way, I did not mention this earlier, is that we are one of the very few banks who never retrenched despite these happenings. We have not, we have taken a conscious decision that we will not retrench anybody. As much as we are freezing on new hires, but we are not retrenching. And we think it's a temporary phase. We will get out of it. But these are kind of things that we are going to do. We're going to invest heavily on technology, including online account opening. Our staff can go out there. This is also investment on software that you upload everything through technology, and the account is opened within a couple of hours. Including, we are looking into the diaspora market as a new product. Okay, we want to be very aggressive in that, especially the Middle Eastern market, where we believe there is quite a number of Kenyans.